Concern about the global economy is starting to build again, with the chief of the US Central Bank describing the future as unusually uncertain. Ben Bernanke gave his downbeat assessment as tough new banking regulations were signed into law by President Obama. His comments will no doubt be of interest to Australia's Reserve Bank. It's keeping a close eye on the situation overseas, especially in Europe, ahead of its next meeting on interest rates.
The global market community is looking for light at the end of the tunnel. They didn't see it from the world's most influential central banker.
We also recognise that the economic outlook remains unusually uncertain.
Federal Reserve Chairman Ben Bernanke told Congress he's not expecting a double-dip recession, but the recovery will be sluggish, and that means stubbornly high unemployment for this Obama term.
I think the realistic expectation in the US is for a slow and fitful recovery with a lot of pain in the US, but that's probably still the best place the global economy can look to for revival.
Ben Bernanke says he's ready to boost the support if necessary.
And I would be reluctant to withdraw that support too precipitously in the near term.
At the same time, President Obama signed into law a sweeping overhaul of banking and Wall Street regulations aimed at ending the need for such support.
The American people will never again be asked to foot the bill for Wall Street's mistakes.
The government will be given powers to break up companies that threaten the economy, and a new agency has been created to guard consumers in their financial transactions.
It means they're going to have more protection. And by protection, we just mean someone's actually going to be reading the fine print for them.
Investors are now hoping for some good news from the next big event, a report on the health of European banks, which is due this weekend. The US equivalent a year ago helped shore up global confidence, and its impact will be a consideration for Australia's Reserve Bank when it considers interest rates in less than 2 weeks. Philip Lasker, ABC News.